Okay, so in this reading, I will be explaining my rules in which I do not enter a trade, or in which if I'm already in a trade, I will exit. As well, I will give examples of what I'm looking for and what kind of price action I'd like to trade. So let's first start with the long side, and I will give when not to enter. So we will not enter a trade when there's a big expansion on 1 hour and we open on Monday with a retracement to the 0.50%. We will not look for a trade in that pair on Monday. We will be waiting to see how price reacts, and we will be seeing until Tuesday a trade. Okay. Second, when we already had a big expansion on the weekly candle and when it's Friday. If it's already a big expansion on the weekly and it's already Friday, I'm not entering, okay? I'm waiting until Monday, and Monday needs to cover the rule that I already mentioned previously, if not Tuesday. Also, if we already touched the 0.50% and we reacted afterwards, if the price comes down to the 0.50% that same day, I will not enter. If price already touched 0.50% and then it goes up and afterwards it starts going lower that same day, I will not enter the trade. I will be waiting until the next day to see how the candle closes. If the price trades through 0.50% the same day, I will be waiting to see how price closes, and I will be seeing if the next candle takes a form of liquidity and then shows some bullish impulse upwards. If it takes a form of liquidity such as previous day low or 1 hour swing lows and then it goes upwards and structure is still bullish, I will be entering. Okay. Final rule: if we took previous day high and we could not displace through it with big closures, and then it starts going lower to the 0.50, I will not enter at 0.50 because we're taking a form of liquidity and then we're going lower. It's not we're going lower to a retracement to go upwards. It's because we're going lower, most likely to reverse. Okay. Now, when to exit a trade? When we tap 0.50% in that day, we react upwards, and then the price starts to push downwards that same day. We will be moving the stop loss to our entry price so we do not lose anything. And if it goes back there, well, we will be exiting, of course, at a break-even trade. But however, if it goes upwards and then the next day it comes back to the 0.50%, I will not be moving my stop loss, okay? I will be moving my stop loss again to the structure, and if price goes back to the 0.50, it's okay, there's no problem. However, I do not want to see price go to the 0.50 the same day. It can go another day, but not the same day. Go see into your charts, you'll understand why I have this rule. Next, you're already inside of a trade. From the beginning of the expansion, you took previous day high and we could not close above it with impulse. We will be exiting the trade if it's already a big expansion and we took the previous day high, we only took the liquidity and then we're going downwards, we're exiting. We will not be guessing if, oh, okay, maybe it's gonna push again. No. We take our profits, we exit. we see if price does anything else later on a separate day, we will be re-entering. Okay? Final rule of when to exit. It's Friday. We already had a big expansion on the weekly and on 1 hour that same day. Okay, so we already have a big expansion on weekly. We already have a big expansion on 1 hour. So we're looking to exit because basically weekly is overextended, 1 hour is overextended. We will be exiting. Okay, that's the rules for the long side. Now we're going over for the short side. Basically, the rules are the same but flipped. Okay, the rules are the same flipped for shorts. So we will not be entering if we already had a big expansion on the 1 hour and we open on Monday, pushing back to 0.50%. We will not be looking for a trade on Monday that same day. So this is, if you already notice the pattern, this rule is basically the one of exiting. We will not be entering on Monday once we have a big expansion on the 1 hour, which is the rule, the third rule of the of exiting a trade. And if it pushes to the 0.50%, I've noticed that most of the times it will at least take a form of liquidity. Doesn't mean we're gonna reverse, but we most likely will break the structure, make a liquidity grab, and after we take the liquidity, we will be going lower. Okay? It doesn't mean we're gonna be bullish. It can be, but most of the times it just takes liquidity, goes lower. So it's pretty dangerous to stay in a trade when it's overextended, because price will make liquidity grabs some of the times. Some other times it will continue, but if it continues, it's not gonna continue infinitely. Okay? We already had, second rule, we already had a big expansion on the weekly and on that specific pair, and it's Friday, no trade. We took already, third rule, we took already 0.50, we reacted, later on price goes back upwards to the 0.50% premium, and it's the same exact day. We do not want to enter. Why? Go to your charts, but I will tell you this so you see the hint. If we push the same day through the 0.50%, most of the times we do a very big push upwards, and that day we might even push to an order block. It doesn't mean we're gonna be bullish, but most of the times we do. So either we lose or we're gonna be entering on a bad positioning, and we could enter on a very bigger risk to reward. So we will be skipping that trade. Okay? Fourth rule, price trades over 0.50% the same day. We will be waiting for the closure of that daily candle and the next candle to take liquidity, like I already mentioned, and show movement downwards. Fifth rule, we took the previous day low. We could not close below it with big impulses. When I mean close below it, I mean on the 1 hour. And if not, it starts going higher to the 0.50. We do not want to short that. Now, rules of when to exit. We already tapped 0.50% in the same day. We reacted the price, and then it starts to push the same day. We want to exit. We want to exit that trade. If it taps the 0.50%, we will want to exit the trade, because it's the same rule as I already mentioned of when not to enter. If it taps the 0.50% and we enter there, and then it goes downwards on our side, and then it starts going up again, it's not going up to tap the 50% and then going lower. No. It's going up that same day, because it's not a different day. It's that same day. It's going up again because the order flow on the day is bullish. So it's gonna go against us. We want to exit. Second rule, we're already inside of a trade from the beginning of the expansion. We took previous day low. We could not close below it with strength, and we start going upwards. We want to exit Why? There's no displacement through the previous day low, which means we took a form of liquidity and then price is showing us willingness to go up. Third rule, it's Friday. We already have a big expansion on the weekly and on the 1 hour that same day, which means Friday. So it's already big expansion. Remember, candles do not expand infinitely on the same week. It's a big expansion, and as well on the same day a big expansion. So we want to exit that same week at the end of the week. Okay, that's basically the rules. And as I already mentioned, it's very important to take note of them because it's liquidity, structure, premium, and discount, our key concepts. With that being said, think about the rules, go to your charts, see what I mean, and follow them. Very important to follow them. Okay, thank you. Now I want to end up this course, and I hope you enjoyed it, with psychology. So psychology is very important in my opinion. Why is it very important? Psychology is very important because, especially in your start, you will lose more than you win. Okay, that's our reality. Because you will not understand how markets work most of the time, and you will lose. There's nothing wrong with losing. Okay? Losing is part of the learning curve. You will lose. It's okay. Don't feel down with it. Okay? Lose. Get used to losing. Get used to losing your money. Especially don't demo trade. Lose money. I don't know how much is enough for you that you can say, okay, this is the amount that I can put to lose, but lose money. Don't feel anything about it. Once you don't feel anything about it, you will be able to trade efficient. If you trade efficient, you will win all the money that you lost. Okay? So lose money. I don't know, maybe say, okay, I'll lose $100 and put it into 10, 20 trades, for example. Lose $5 per trade when you lose. Lose. But if you win, then you're gonna be winning and losing and etc. So it's gonna be more than 10 or 20 trades, of course. But get used to losing. And when you lose, don't just say, I lost, it's okay. No. When you lose, go into the chart. Go and look, why did I lose? What happened to the price? Then note it into your journal, learn about your mistakes, and start noticing once it happens again. Okay, this happened. And if you notice a pattern in which you're losing a lot of times to that specific pattern, be careful. Do not do that again. Of course. Maybe even reverse it. Say, okay, when I lose, this happens. I'm gonna start doing the opposite. And now I'm gonna start winning. That's what I've done with multiple of my trading. I learned a lot from my mistakes from losing. So I lost, now I don't do that. And some things I even do the opposite. So now I win when I do the opposite. Losing is very important. It's only the people that are fake gurus that say, oh, I win $50,000 every day and blah blah blah. Yeah, they never lose, but they don't ever lose in their demo account. But in reality is, even the best traders, I do not consider myself the best trader in the world. I'm sure there's better people that had more experience than me, but these people will lose. But it's not when you lose that it matters, it's when you win. When you win, you make sure that you win more than you lose, and that's all. If you can win more than you lose, you win money. Simple math. If you win 10 times and you lose 7 times, but when you win 2 times what you lose, do the math. 10 times 2, 20, minus 7, 13. So you're winning 13 times the loss. So you're being profitable. That's what matters. Okay? With that being said, thank you for assisting the course. Remember to study, to trade, to lose, to don't care, and learn. With that said, take care. Okay, now I will be talking about the strategy and explaining it. So let's start. For example, what I would do is I would go through many pairs of crypto, basically the major ones, okay? So take into note Bitcoin, Ethereum, Solana, Polkadot, Avalanche, Phantom, Near, Doge, Shiba Inu, etc. Cardano, all of these big crypto market caps, which have big liquidity, big volume, okay? Not illiquid tokens which can dump and pump 100% in one day. No, because those will wick you out. They will not have clean price action such as this one. Okay, these ones have clean price action, predictable price action. The other ones might do this. Boom, 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 because there's no liquidity. Once someone enters the market, it goes up, down, up, down, up, down. We don't want that trash. We want predictable markets. Okay, so focus on the major ones, like I already mentioned. Then the second thing I do on my strategy is, this is something no one will tell you, but if you close below a previous week high, the next thing that will happen most likely is we will go for that same candle, the previous week on the new week. This is a new week, March 18. We will be going for the previous week low, because we took the high and we closed below. Now we are going for the low. If we close above a previous week low, what are we looking? The opposite, for a high. Now we go for the highs. There we go. If we close above it, we're looking for the high. In this case, it does not take the high. It just goes lower. And what it does next? It takes the low. So we're expecting again what? The same thing. We take the high. In this case, we took both. What are we looking in this case? In this case, we're looking for 1 hour structure or daily. The same patterns on daily. On the daily, it happens the exact same thing. I'll show you. So on the daily, we have the same. What happens here? We closed and it's Sunday. So we're expecting this low to eventually be rated. This is what we're expecting on the new week. So it's open on Monday, boom. We take the high, but it's not this high, it's this that we're looking for. We take this high, which is a form of liquidity, and we close lower. And eventually we take it, we closed above it, okay? What are we expecting? We're expecting this high. And eventually we take both, either this low and this high. So now in this case, what we'll be looking? We will be looking for 1 hour to see what's the structure. In this case, what it did, it's bullish. So we were expecting higher prices, which eventually we did. You see what I mean? We trade weekly liquidity with daily liquidity and 1 hour structure on that liquidity. Pretty basic. But you need to have all of the concepts that I already explained. You need to have premium and discount, fair value gaps, order blocks, structure, relative strength, to know which pair is the strongest among all of the pairs that I already told you to trade. I already showed you which pairs to focus on. All of these concepts that I already explained, you will be going through it and you will be selecting your pair. Now, once you select your pair, you will be doing what I just said. If you do not understand it, go over that part multiple times until you understand it. I will be saying one more time. If we close below a previous week's high, we're expecting that candle's low. If we close below that low, we're expecting this next low, and the next low, and the next low, and the next low, and the next low, etc., etc. Are you telling me that it doesn't work? Look at this. Did we ever take this low? No. This high? No. what did we do here? We took this high, we took this low. So it took up a lot of weeks. It basically took a few months, about 3 months, but we eventually got there. Okay? Now, are we not going to be trading here? No, of course not. We can be trading here, of course. We can look for trades on the daily. On the daily is the exact same thing. If we close above it, what are we expecting? We're expecting these highs to be rated, and next thing right here and here. You understand, right? This is the strategy. We mix it with the 1 hour structure, and we're looking for the order flow. This is order flow. This is how the price is moving. It's closing lower, we're going lower. It's closing higher, we're going higher. And the structure is our entry. That's how we know where we're entering on, where we can get invalidated, and our bias is on the higher time frame, daily and weekly. Pretty basic. Now, this might seem confusing at the start, but trust me, you do not need a 4-hour video to understand. What you need is 20, 40, 50 hours of looking at the charts, seeing what I just explained in these few minutes, going over it, and once you go over it, that I already said, look for the previous week highs and lows. If we close above, we're expecting high. If we close below, we're expecting lower. If we take the high and we close below, we're expecting lower. If we take the low and we close above, we're expecting higher. Same thing on the daily. Weekly is the big dad. Okay, weekly is the big dad. Daily, what will daily tell us? Daily will tell us when weekly is likely to fail, and also the 1 hour will tell us where the daily wants to go, because the daily is gonna take a lot. Remember the time frame alignment that I already taught you. Daily is gonna take a lot to play out. Weekly is gonna take all of the week, but the hourly, we can see where we're moving through. We can see little by little where the price is pushing. For example, right here on this week, we took some trades on my Discord. If you want to enter the Discord, I could, but tell you about it. Okay, just let me know. But for example, here, are we expecting lower prices? Yeah, sure. Some people in my Discord were expecting lower prices. However, I told them, careful, very careful, because we're in a discount. First of all, in a discount of the weekly. Second, the 1 hour, remember the rules I've taught you. There are rules to follow for a simple for a big explanation. We touched the 50, okay. Did we go there the same day? No. We went there the other day, okay. We tapped into it, we went lower, okay. But what are we doing here? We're going higher the same day. So once the price steps it, goes lower, you're out. You're out of the trade, basically. Even here, once if you traded in here and then price starts pushing higher, you're out of the trade, because price should not push higher. And here you can see the reason. I gave you rules to follow, and you should follow them for a reason. Price goes there, it can go another time, another day, but it cannot go that same day and push through it, because that means the order flow is bullish. And now on the weekly, we're still bearish. Yeah, some people in my community were still bearish, but look at this. We're closing above. Perfect. We're closing above. Now, the 1 hour is bullish and big expansion with fair value gaps. So are we really thinking that we're just gonna take this and then we're gonna continue lower? Not really. Why? Because this is big impulses. Daily is with our time frame. Also, we're having extremely bullish on a discount of the weekly and the daily, and the 1 hour is looking extremely bullish order flow, making higher lows, higher highs. There's no reason to think that we're just taking this liquidity to go lower. Okay, that's all of the confluences we're looking for. That's how you trade. You look for confluences and you mix it up. You can't just look for one pattern and think, oh yeah, I'm gonna trade this. No, no, no. You have to think over it. You have to think, okay, weekly is doing this, daily is doing this, 1 hour is doing this, we're in a weekly discount, we're in a daily discount, 1 hour is looking bullish, daily is closing above previous day candles. Okay, I'm thinking weekly is likely to not go for that low and form a swing low, because that's a swing low. Basically, a swing low is previous candles higher and higher. Look at this. We could be expecting for this to go lower, right? Let's go to the daily to see what could we have seen. We close above this candle. Okay, on Monday, what would we do? We take this, we form candle closure above that low. Remember, it's the same as the weekly. And now let's see this. So we're having the same exact thing that I already mentioned. We're going through it to the order block, yeah, whatever you want, then it goes lower, and then again, but structure still bearish. We will be waiting a little bit more on this one. So basically, you could enter right here once we break this internal structure. Yeah, you could, but in my experience, it's best to wait. We just wait. So we wait that whole week. No trade that week on this pair. We do not know Ethereum, Solana, Phantom, Polkadot, all of these. We do not know if they were trending already. But on this pair, there was no trade. Now, once we do break it, right here, what are we looking for? We're looking for weekly, daily, and 1 hour order flow. In this case, we could be waiting until here. Now, here, no, nothing. Now here, there we go. So there you go for your first trade that you could enter. It's a new week, actually, new week, and it's weekly forming a swing low. You could be expecting that. Now, are we just gonna make all of this impulse and afterwards are we just going to go and trade all the way downwards? Not really. It's more likely to continue higher because 1 hour is bullish, weekly is bullish, daily is bullish. So once the new day opens right here at this hour, actually the new week actually opens right there. It taps what, 0.50%, and then what do? We start rallying. Okay, that's basically what we're looking for. That's how we trade, my strategy, and it works on every single pair. On every single pair, of course, of the ones I already mentioned. I do not want you to go trade all of that no liquidity trade pairs. Right now it's happening the exact same thing. Now the question is, okay, we tapped into what? We tapped into the 50 previous day. Perfect. Now we're tapping into it right now. Now we could enter right here. Yeah, we could. However, there's another multiple pairs that I trade, such as SHIB, such as DOT, etc. So I will not be looking into those when I have stronger pairs, you know. I would prefer trading Polkadot that looks much bullish. Then I would be preferring to trade Ethereum in this case. Of course, all of them have bullish structures, but some have more bullish than other. Okay, some look more bullish, some look ranging. So you understand what I mean. You will be going all over these pairs. You will be evaluating, and after you choose which pair is the strongest, you will be entering on that pair. Understood? So that's all that I have to tell you, and that's everything that you need to know to succeed. Master it, and that's what you need, nothing else. With that being said, thank you.